Good evening, guys. It is Monday, February 10th, 2025. This Bathrobe business. I'm Georgi Oganov. I got some decaf coffee and I got the news. So let's jump into it. First video of the week. I'd like to actually open with a story that happened on Friday, obviously, the jobs report. Just a little bit of analysis here. So on Friday, I do have to boast because I did predict this. So you heard it here first on Thursday. That I said on Friday we would probably see muted numbers coming out of the Labor Department in regards to jobs. Now, this is due to a couple of things. I think definitely tariffs are at play, but I think it's actually too early to talk about tariffs. Overall, we're seeing very muted earnings coming out of a lot of these companies. So company after company is reporting very muted earnings, and even some of their outlooks look somewhat negative. They're trying to fluff them up with, oh, we've got AI here, we're restructuring there. But if you actually read between the lines, I think a lot of these companies are really facing an uphill battle for 2025. And I think tariffs are going to be in addition to that. So we'll talk about tariffs a little bit later in this video, but I do want to share the jobs report because it did come in where I anticipated. I didn't think the jobs report was going to be terrible, but I did think it was going to underperform from previous reports. So on Friday, we had 143,000 new jobs added for the month of January. That is below estimates of 169,000. Now, the good news is the unemployment rate did fall 4%. But still, we're seeing that the new year is starting with much lower numbers in regards to the outlook on jobs. Wages did rise more than anticipated, which could be good or bad. Definitely inflationary, but good from the individual standpoint. So wages rose 5% for the month, 4.1 from year to year. So that's a good increase of about 4% in wages from a year ago. The estimate was only going to be 3.7. So wages are definitely increasing. Now, another thing I want to talk about is where the job growth occurred. Now, this is where it's a bit of a mixed bag. So according to this article from CNBC, healthcare and retail were the leaders. Now, retail is not a surprise because we've talked about this last 6 months about how strong retail has been. That's why I kept saying, invest in retail, buy retail. We invested in a bunch. If you watch this channel regularly, I'm actually back in Bath and Body Works because they're due to report on, I think their earnings are at the end of next week. And so I'm anticipating a very strong quarter. So I've talked about Bath and Body Works here because I think it's undervalued. That's one of the few that I'm still in. I came back into it, I believe on Friday. I purchased back into it. So I do expect strong earnings, but that's a tangent. But retail is very strong, healthcare is very strong, and government is very strong. Now, where I got a little bit concerned was that hospitality and leisure wasn't in this list. And hospitality, leisure, and retail, in my opinion, are where you look to see real strength in the economy because that's more disposable income, where you're spending money that you have or prospectively will have shows strength in the economy. So that is a little bit concerning, again, showing more muted outlook for the future. However, I did compare it to the JOLTS report. And the interesting thing with JOLTS is that there's more job openings in arts, entertainment, and recreation than almost every other sector. So JOLTS currently has about 65,000, and the JOLTS report is from the Labor Department. I can't remember what it stands for. It's like, there it is right there. Job openings, labor turnover, and summary. So the JOLTS report is actually showing that those sectors, the recreational sectors, are still seeing very strong growth, seeing as how their job openings are still very strong. So overall, it seems like people have a lot of disposable income. We have seen the labor market balance out a little bit more. But overall, I still predict a more muted growth for 2025, just given what we're seeing, given the job growth we're seeing, given some of the reports that have come out. Now, that could turn around at any moment, but right now, that seems to be the trend that everybody is reporting on. Next story. I'm just going to mention this real quick story in passing. This one is from Fox Business.
At Franklin Templeton, we're always innovating.
For you. So, Elon Musk has offered about $100 billion, $97.4 billion, to take over OpenAI with his investor group. The only thing I'm going to say about this is, again, more smoke and mirrors with Elon Musk. There could be two things happening here. The first is his AI is not working. So it makes me laugh because He was part of OpenAI, then he left OpenAI, then he sued OpenAI, but he has XAI or AIX or whatever it's called. He has his own AI company now. It's a branch off of Tesla, essentially. And he's building massive data centers. I was listening to the Lex Friedman podcast the other day, and it seems like his data centers are going to be larger than anything else that has been currently built by any of the companies. Yet, if he's doing that, why does he need to purchase OpenAI? One argument is that it's not working out for him. His algorithms and his neural network, I shouldn't say algorithms, I'm sorry. His neural networks aren't functioning the way they're supposed to. That there's more complexity here than he anticipated, and it's just not working out. And he is facing a possible catastrophe where he's overpromised and will once again underdeliver. The other alternative is this could just be a flex, showing that look at how big and powerful he is, look how serious he is about AI, which further underscores why you should invest in XAI. So either way, I don't think it looks very good for it, but that's up to you guys to decide. So I'm just going to leave that where it is. It was just, I figured, a story I would mention in passing. Next story I want to talk about is gold, my favorite subject. So today, gold soared to about above 2,900. At one point, it hit 2,934. Again, this is all-time record. This is coming off of the new wave of tariffs that Donald Trump is promising, specifically towards steel and aluminum. Both very powerful manufacturing sectors in the United States, and both major sectors where we do a lot of import. So as a response, gold is once again rising. Interestingly enough, crypto is not. Crypto did have its major rally right at the start of the administration, right before the start of the administration, and it's maintained that rally, sometimes a little bit higher, a little bit lower. But all of these tariffs, every time there's talk of them, anytime there's mention of a tariff, gold directly responds to it. What's interesting is in this article, it talks about one analyst who's predicting gold to hit anywhere from 32 to 3,500 this year. That's very interesting because the price range was about 3,000 last year. Goldman called it that it would hit 3,000 before the end of the year. It did not. But then we talked about how it would definitely hit 3,000 by the end of the quarter, which it definitely will. And now it seems the next benchmarks are the 3,200 and the 3,500. I think those are definitely possibilities towards the end of the year. The interesting thing is going to be what happens with CPI and PPI later this week. I think they're reported on Wednesday and Thursday. This article doesn't mention that, but that's rolling around in my head for some reason. So a lot of people are saying, well, these numbers are going to determine where inflation is headed. I don't think they are because it's still too early. Let's not forget that these PPI and CPI numbers are going to be for January. This is before the Trump administration really got going. That's 20 days in January where Trump was not in office and before people truly knew the extent of the tariffs that he was passing. So it's really going to be the February numbers that determine the direction of where gold's going to head and where inflation is potentially going to head. So I don't think that these numbers are going to matter, despite the fact that I'm always kind of a hawk with CPI and PPI numbers. I think there's so much change in the market right now. These numbers don't matter for the month. So whatever it says, I'll mention it, but I don't think it matters. February is what we really have to go and look at. Next story I'm going to talk about is specifically about steel and aluminum. So interestingly enough, so Trump is saying he's going to pass about 25% tariffs on steel and aluminum. So what's interesting with that is for years, for decades, I've heard how China devastated American steel and American aluminum. We went from these massive manufacturing belt to the Rust Belt because China went in and undercut the price of steel, et cetera, et cetera. And I just took that narrative at face value. I just believed it. Now, here with this article, it talks about how actually Canada and Mexico are the greatest importing countries for steel and aluminum. And if you look at this chart, and let me make sure you guys are seeing it. Yeah, you're seeing it. Okay. So with this chart, Canada is number one by a long shot. So in regards to steel, this is for the year of 2024. Canada exported to us $7.14 billion of steel. With aluminum, it was $9.42 billion. Mexico was in close second with, not a close second. A $3.5 billion was Mexico, so about half of what Canada does for 2024 for steel. And then with aluminum, they're way down. They're one of the bottom feeders. But China barely hits the top 7 here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. China barely cracks the top 10. So, of all this talk about China destroying the American economy in regards to smelting and metals and everything, they barely cracked the top 10. They imported, we got about 0.8 billion, so about $800 million in steel imports from China last year. And believe it or not, they didn't get that much higher when it comes to aluminum. It was only 0.77 billion, so about $770 million dollars in aluminum imported. Germany is going to be suffering because they're one of the more major importers. The UAE, Canada, and Mexico. Those are going to be the primary targets. So we'll see what happens with it. This is kind of funny because this seems to be taking effect as soon as they said is March 4th. This could still turn around, but it seems like these tariffs are less negotiatory like Trump had previously. They're very specific to sectors. And I think that these ones will go in effect, unlike his blanket tariffs that we talked about last week, where they were really used as negotiating tools. He has yet to give any counters to these negotiations. He has yet to propose anything he wants in place of them. He's just saying that these tariffs are going to go in effect. Also, I think immediately what went into effect was reciprocating tariffs. So any country that already had tariffs on the United States, this reciprocated. I think that's already in effect. But these ones in regards to steel and aluminum won't happen until March 4th. And I think they will happen for sure. Last story I'm going to talk about is just part of what I've coined as the great realignment. McDonald's revenue disappoints. So McDonald's actually didn't do terrible. They came in earnings per share right as expected, $2.83. Their revenues fell 6.39 billion versus an estimated 6.44 billion. So they underperformed, less sales per store. This is interesting because we're seeing this again and again across multiple sectors, across multiple facets of the United States economy. Whether you're a fast food chain or you're a technology company, we're seeing this trend of realignment into what is, I would say, more of a norm and not hyper growth. McDonald's is saying that they're going to be revamping their menu, offering new deals, et cetera, trying to perk up the outlook. But I think this is just part of the greater market trend that we're going to be seeing in 2025. I think we're still going to be seeing a very muted growth. I think there's still plenty of disposable income, but I still don't think you're going to see as strong a growth in some of these sectors as we did the last couple of years. And let's be honest, a lot of that was fueled heavily by AI. I know McDonald's doesn't necessarily apply to that, but it seems like the AI spurred more excitement just in the market itself. And I don't think we're going to see that moving forward into 2025, and we'll see what happens with 2026. That's pretty much it. Those are the stories of the day. I hope you guys enjoyed it. I hope you have a fantastic Tuesday, and I'll see you guys tomorrow evening. Bye.